Onur, Bernstein is well known for its research, but there's also a growing private wealth side. Can you talk about what's fueling the expansion on that particular side of Bernstein's business?
No, absolutely. Bernstein Private Wealth, $140 billion platform, and it has been a long-standing business of ours, but we definitely had good momentum. It's a combination of two things. One, we continue to steadily increase our financial advisor headcounts, grown at roughly 10% over the last 3 years. Furthermore, we continue to make our teams more productive. So our existing teams are more productive, and we continue to retain and attract talent.
And how are they advising clients in these volatile markets? I know that the markets keep hitting new highs despite these wild swings, but how are they protecting clients from doing things that they shouldn't be doing?
We always have simple principles, never try to time the market. That has been our mantra. We always take a long-term perspective. Value of advice is keeping the clients stay invested, because there's always periods of outperformance that you can miss if you try to time the market. And diversification, we think about it in three different ways: asset class, geography, and publics and privates. So for us, stay invested, long-term, diversify on all those three dimensions.
Well, let's talk privates, because alternatives have grown in popularity quite a bit. Ever since 2022, when stocks and bonds both fell, advisors have been putting their clients into private market assets or alternatives. So what are you advising along that score?
Sure. I mean, private assets is a secular trend. There are more investable opportunities in the private markets today than before, and they are more accessible because there are many more ways we can bring our clients to these assets. Ultimately, we have been doing this for a long time. For us, it's not a new phenomenon. We have been using private alternatives in our client portfolios for more than a decade. To me, it's all about making sure private alts is not a hammer looking for the nail, being intentional about for what purpose we are using it for. In ultra net worth portfolios, it might be private credit to generate income. In a mass affluent portfolio, it might be a long-term accumulation strategy for retirement.
Any concerns about liquidity or cost when it comes to alternatives?
It depends on how it's packaged and how it's communicated. I mean, ultimately, if you know what you are investing in, and if you understand the risks, I think these are all manageable risks, but you need to definitely know whether you are in a drawdown fund, which means you don't have liquidity in the short term. You need to know the terms if you are in an interval fund where you might be gated. So it's all about, I think, investor education. Like anything else, you need to understand what you're investing in. That's where I think our advisors with the decades of experience helping guide the conversation is extremely valuable.
One more question about alternatives. Do you think the quality of private credit, for example, is still high? Because everyone's looking for the same product now. It's become very popular. And when that happens, Wall Street has a tendency just to keep pushing out new product, and the quality suffers.
Yeah, so far we have not seen those signs of degradation, if you will, because if you think about the private markets, most of what's happening is the bank disintermediation, alternative asset managers coming in to manage assets. So these are large pools of credit capital. So it's still in the early innings on a relative basis. I mean, asset-based finance is an $8 trillion market, and the asset management products are only a fraction. And also, if you look at the broader credit environment, the corporate balance sheets are healthy. Most of the consumer balance sheets are healthy. So we are, I think, still in a pretty healthy spot in the credit cycle.
And then finally, as we head into the second half, are there any other trends other than alternatives that is bubbling up from your advisors that you're hearing about?
Sure. Ultimately, how to manage volatility and how to manage it in a tax-efficient way is always important. These are evergreen topics. On the tax management side, I mean, ultimately having not only you need to invest in the right things, but you need to do it in the best tax-informed way. And we have been building a lot of capabilities and expanding our toolkit in our wealth management platform, whether it's the transition tools, whether there are different versions of direct indexing kind of products we created. We are very on top of that.
All right. Well, thanks for coming on and talking about it.
Thank you. Appreciate it.